Okay, our learning objective 4 is prepare an analysis showing whether a special order should be accepted or not. So this is very nice application of relevant costing. So let's explore it. So let's explore our key term and concepts. So what is a special order? A special order is one-time order that is not considered part of the company's normal ongoing business. So when analyzing a special order, only the incremental costs and benefits are relevant, right? Incremental, we'll see that in our coming slides. What do we mean by incremental costs and benefits? So since the existing fixed costs or overhead would not be affected by the order, they are not relevant, right? So since it's a special order and that is not a ongoing normal business routine, so on this order we will not apply overhead. Which kind of overhead? Let me write it clearly. Overhead fixed. So in order to understand special orders, assume the following information regarding the Jet Incorporation. So they make single product whose normal selling price is $20 per unit. So a foreign distributor offers to purchase 3,000 units for 10 per unit. So this is one-time order that would not affect the company's regular business. Annual capacity is 10,000 units, but the Jet Incorporation is currently producing and selling 5,000 units. So the data we have here, that company has how much idle capacity? Company has capacity total 10,000 units and company is now making 5,000. So we have idle capacity which is 5,000. If company is not taking this special order, right, so company is losing the capacity. Company still have the capacity of making 5,000. Company will be losing this 3,000 units contract, but this is one time, which means this will not affect normal or regular business. What do we mean by regular business? In that case, where your normal customers or clients, they are not affected. For example, one client will say that I got this 10 per unit and you got 20 per unit. So there is a discriminant pricing by Jet Incorporation, and there's going to be like some kind of dispute, or Jet Incorporation ended up losing its clients or customers. So remember, special order is one time and is not affecting our company's regular business, right? So in this situation, we have idle capacity, we have time, and we have capacity to produce these special order units as well. So question comes, the price is 20 and the distributor is asking for 10. So look at the difference, 50% reduction in price. If you are a layman, you will be shocked. Wow, we cannot decrease our price to 50%. So the question arises, should the Jet accept the offer? So here we are given the Jet Incorporation contribution income statement. So right now the situation is they are selling 5,000, 20 is the price, their variable cost total 40. So if you divide 40,000 with 5,000 units, answer would be 8. So in general we can say that our and the manufacturing overhead is not affected, so we will not consider this fixed manufacturing as a part. So variable cost is, we just point out 8 and the distributor is getting us 10. So let's see that one, right? How we calculated this 8 is 40,000 divided by this 5,000. So if the jet accepts the special order, the incremental revenue will exceed the incremental cost. So what are the incremental revenue? The incremental revenue would be the foreign distributor quoted 10 and jet will deliver 3,000 units. So jet will receive 30,000 in sales. Whereas jet will incur cost, variable cost 8 multiplied by 3,000 units, answer is 24,000. So in that case, there's going to be a $6,000 increase in their income. Why? Because fixed costs are unavoidable and that the variable marketing cost must be incurred on a special order. If marketing cost is also not incurred, then the variable cost would be further less and our profit will be further higher, right? I hope you understand this one. So assume that, sorry, just remember that when there is a special order, but remember the nature of the special order is that it's a one-time opportunity and you must have some idle capacity. If there is a capacity of 10,000 and jet is utilizing 8,000 capacity already, so can it satisfy the order of 3,000 units? No way. Why? Because by doing this, it will hurt its existing customers or it will hurt its normal business routine. So for special order, it must be one time. You must have some kind of idle capacity, and fixed cost in this case is not relevant. It means you just skip this fixed cost analysis and you just find out the incremental sales and incremental cost, which is a variable cost, and if the balance would be increase in your net operating income. So in that case, jet should accept the order. So here's a very nice quick check, and that is Northern Optical Ordinary sells the X lens for $50. The variable production cost is 10. The fixed cost is 18 per unit, and the variable selling cost is $1. So a customer has requested special order 10,000 units of the X lens to be imprinted on the customer's logo. This special order would not involve any selling cost. It means you will be not incurring this cost, you will be saving this cost. Plus you have to buy an additional equipment that cost $50,000 to imprint their logo. So let's move further to complete this question. So what is the rock bottom minimum price below which Northern Optical would not go in its negotiation with the customer? In other words, Northern Optical actually be losing money on the sale below what price? So there is ample idle capacity to fulfill the order, and the imprinting machine has no further use after this order. So customer asked for 10,000 units. Logo machine is 50,000. So per unit additional cost, incremental cost would be here 5. Their variable cost is 10. So answer is 15 variable cost. So if customer quote cost above 15, that would be suitable, or that would be the cost where the Northern Optical would not having any loss. So I have pasted exercise 13.4 for our class exercise. I just want you to pause the video right now, read the question here, and try to find out whether the special order sorry, whether this special order should be accepted for this price or not, right? Here is the solution for this one, and try to read the solution and compare it with your own answers, and I hope this clarifies your question. If still you have any question, please do write us in our Blackboard discussion group or in our WeChat group as well.